Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture, and we are zooming in on the year ahead where we are expecting volatility and more uncertainties to become the new normal. So looking at what CIMB Singapore is expecting, they are exploring 5 key themes that investors can navigate Trump 2.0. And to help us out this morning, we have Jason Kuan. He's Director of Investment Research and Advisory for the Chief Investment Office at CIMB Singapore. Good morning, Jason. How are you doing today?
Good morning, Ryan. I'm doing very well, thank you. How are you?
Great to hear. And of course, it's going to be a year to look out for, lots to keep an eye on. And 2025 is going to be a year where ASEAN has a lot going on with all the potential tariffs and also what to look out for when it comes to U.S. economy and the U.S.-China trade wars. What is the potential impact of tariffs on ASEAN's growth, taking into context what we saw in the first term with Donald Trump?
If history is any guide, I think we can expect ASEAN to see a rise in its share of U.S. trade, right? So we saw this as Chinese trade declined under Trump 1.0, where there wasn't any decline in U.S. trade deficit. So this implies that companies actually substituted their import to other regions rather than resorted to producing them locally. So China is expected to feel the brunt of U.S. tariffs, and being one of Singapore's major trading partners, Singapore is also likely to share some pain. So Singapore's open, trade-dependent economy, for example, could face slower growth, as well as weaker business sentiment, even though it may not be a direct target of the tariffs. Similarly, given ASEAN's reliance on exports, an overall decline in global trade could impact ASEAN economies. So as we have already experienced earlier this week, announcements may change unexpectedly. Ultimately, we will need to assess the policies implemented to have a better picture of whether ASEAN will benefit or not under Trump 2.0.
Yeah, Jason, taking reference from Trump 1.0, we saw with all the restrictions on China, companies went elsewhere with the China plus one perspective that they need to set up shop, diversify. And in that sense, ASEAN to some degree was benefiting with the spillover, so to speak. What do you see in terms of bright spots in 2025?
It's important to recognize that the U.S. continues to be the primary driver of foreign direct investment for our region. So with supportive policies in place, greater regional coordination, as well as domestic stability, we believe foreign direct investments will continue to grow. Like, for example, closer to home, we've got Changi Airport Terminal 5 construction, right? MBS is planning an expansion, which is expected to start at the middle of this year sometime. And of course, the latest buzz is the announcement of the Johor, Singapore Special Economic Zone. And I think coupled with Malaysia's national semiconductor strategy, plans like these will continue to grow the attractiveness of the region for companies looking to invest. So I think over the longer term, it's important that ASEAN's geopolitical neutrality, strategic location, as well as commitment to free trade remain, as these are factors which create an environment where companies actively seek investment opportunities. And of course, the Singapore dollar is often viewed as a safe haven currency due to its strong economic fundamentals and political stability, which businesses tend to consider when making investments.
Yeah, talking about the dollar, the US dollar in particular, we are expecting a resilient or even stronger US dollar. How will that play out for emerging markets and in ASEAN?
So I think if there is a slowdown in the global trade, Singapore being a trading nation will likely experience some drag, right? Its open trade-dependent economy could face slower growth along with weaker business sentiment. And in Malaysia, fiscal reforms are underway, which aim to strengthen economic resilience. But these measures could also raise costs for customers. And of course, the consideration is on the Malaysia ringgit, which is expected to be weaker against the dollar, which would translate into higher imported inflation, which can then impact corporate profit margins as well as the consumer wallet. So you're right. At this juncture, we do expect a stronger dollar as well as higher for interest rate regime to stay, which will likely make ASEAN and other emerging markets less attractive. This could slow down portfolio inflows as investors stay invested within the United States. And typically, this does translate into weaker bond and equity performance for emerging markets.
All right, something to watch out for in terms of headwinds for ASEAN. All right, let's talk about opportunities for investors this year. What is catching your eye?
Market volatility is expected to rise in 2025. We've seen some of that happen earlier this week. And to manage this, we advocate a diverse portfolio of stocks and bonds with global exposure to mitigate these shocks. So bond yields have gone up, but they seem to have temporarily settled. So the increase in yields has caused bonds to be more attractive. But do be aware that interest rates, as they stay higher for longer, means that investors may have to wait out any potential capital appreciation, right? On the bright side, investors can continue to receive bond coupons as they ride out the volatility. So I think it's important to stay invested in a global diversified portfolio, especially as markets tend to get a little bit more volatile and choppy.
All right, talking about a global portfolio, how much are you looking to India, which to some degree may be a beneficiary of sorts with China taking on the US on the trade front?
Well, we don't really have a view on India at the moment, but I think you're right. We've seen some benefits coming in from India as companies move away from importing from China. So there may be some bright spots coming in as well.
Okay, and on the equities front, how bullish are you when it comes to Japan, which is going through quite a few reforms, and we have the stock market also doing well in recent years?
Japan also looks to be promising. I think the central bank, they've done one rate hike. And at the same time, inflation is coming back into play there. So companies are starting to invest and starting to, even pass on some of these costs to consumers. So there are definitely some bright spots in Japan.
Okay, then going back home to Singapore, we've got, of course, the bank set to announce earnings in the coming weeks. And, of course, the REIT sector is one of the more popular places investors like to look at. What's your view on what to invest in when it comes to Singapore landscape?
They are really continuing to be positive on Singapore. As you mentioned, the banks have done well, and we believe they are going to continue to do so given the upcoming, expectation of interest rates. At the same time, when I last looked at the data, they are showing very promising dividend yields. So it's definitely an opportunity that I think we should consider.
Okay, a great overview of where things are going. And we've been in conversation with Jason Kuan. He's the Director of Investment Research and Advisory for the Chief Investment Office at CIMB Singapore. Jason, thanks for your time this morning.
Thank you so much, Ryan.
All right, great chatting with you. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.